Yes.
Awesome. Awesome. Well, welcome to our NAWBO Lunch and Learn. My name is Felina Hansen. I am the proud past president of NAWBO San Diego. And I'm going to ask for participation here. So as I mentioned a moment ago, and I'll say again, please use the chat. Put your information, your LinkedIn, your website in the chat, introduce yourself, say hello. We're also going to be using the chat for questions. So as we go, Rosalinda has a really comprehensive presentation rundown of all the resources. Hey, Lori, good to see you. But I'm going to ask for folks to ask questions in the chat. Rita, you are the best. Thank you for kicking us off. Would you also put your LinkedIn in the chat so we can connect with each other as well?
Okay.
My model student, Rita, lighten up the chat. Because you came here today to learn about access to capital, but NAWBO is also a networking organization. And so let's get to know each other a bit today as well. So awesome. Thank you, Eric. I appreciate that very much. So perfect, Lemon. Thank you. Okay, we're getting the party started here. So again, intros and questions. I'm going to go ahead and tell you a bit about Rosalinda. So you know who she is and what her background is, and then we'll get started with all the amazing information that Rosalinda has for us. So as I mentioned a moment ago, I've known Rosalinda for, goodness grief, it's got to be, feels like 15 years or so, right?
10.
Okay. So just when I started Hair Hub, we got to know each other. So when you joined Accessity, which was 10 years ago, and became a loan officer, and now is a manager. She guides a team of 5 passionate development officers to fulfill the organization's mission. Accessity's mission is to provide access to capital to primarily underserved business owners, including women, veterans, Hispanic, Black, and low to moderate income entrepreneurs and business owners. She has a degree in business with a major in accounting and has extensive experience in lending, taxes, auditing, and financial analysis. And she lives in North County. She's up in Oceanside, bringing up the North County contingent here. So welcome, Rosalinda. I was familiar with Accessity when it was Acción, and you guys had a name change a few years ago. So if folks are like, what is this Accessity company? You may be familiar with the term Acción. So welcome, Samara. All right, so let's get into it. And again, if you're just arriving, please use the chat to introduce yourself so we can all connect with each other. Rosalinda, take it away. Let us know. Go ahead and screen share and give us everything we need to know.
Thank you, Felina. It's a pleasure to be here today. And let me see if I can make sure I see all of you. You're going to be keeping track of the chat?
Yes, ma'am.
Perfect. Okay, so well, I don't need any further introductions because now you know who I am. But so Accessity is an organization that used to be called Acción, and in 2021 we rebranded and chose our own name to be Accessity. Acción was an actual license, and we decided to rebrand as Accessity and have an own brand pretty much. So today we're going to talk a little bit about how to become loan ready as a business owner, and what type of lenders you want to approach, or you know what lenders you can approach, right, based on your type of business. What questions you should ask to lenders, and what documentation you are going to need when you're looking for funding for your business. So I am going to assume that all of you here have a business, or are planning a business, or have had a business in the past and are considering restarting a business.
Yep, absolutely. And I know we've got some folks in the room too that perhaps help their clients with some of this information. So they may be here just to learn how they can better support their clients.
Fantastic. That's really helpful if you can provide information to the clients, because one thing I see sometimes tax preparers try to save them money, and they, you know, they don't ask the question, are we planning to get a loan this year? Because that's a very important question that every financial tax preparer or CPA should be asking the clients as well, right? Now, our organization has been around for, can tell you, since 1994. So almost 30 years we have been serving the San Diego community. In 2016, we expanded to other counties, and in 2021, we expanded to LA and Orange County. So we now serve six counties in Southern California. We have lent 69 millions, and 11 millions of those were during the pandemic as COVID relief funding to small businesses. So that's the impact that we have. Now we have a target audience, right? The people that we lend are primarily people of color, Latinos, African Americans, low to moderate income residents, but we don't lend exclusively to them. But that is how we get a designation of Community Development Financial Institution for lending to the communities of color. And this designation is given by the U.S. Department of Treasury. That's what we are called, a Community Development Financial Institution. Now, we also have a premium rating in Charity Navigator as a responsible lender. Now, the first thing you need to do as a borrower when you're looking for funding is identify your strengths. So reflect on your strengths as a borrower based on your business and you as an owner of the business, or all the owners of the business if you have partners. These are the areas that any lender is going to look at. They're called the 5 C's of credit, very famous. You go into Investopedia, you can Google them, right? But they are character, capacity, collateral, capital, and condition. When it comes to character, we're going to be looking at your credit history, at your experience in the industry, because those are things that are going to give us an indication that you might be successful. So basically your financial reputation, if you can put it that way, but of course, how good you are at this particular industry. Now, in terms of capacity, we're going to basically make sure you have the ability to make the payments on that loan, because we're here to help you. We're not here to hurt you and put you in more debt and to get you in trouble. So we're going to be looking for any steady source of income that you have in addition to your business if your business is not generating revenue yet. So it's important that there is a steady source of income coming in, either from your business or from your personal income. For startup businesses, because they are not generating revenue yet, it has to be a source of income, a personal income. Now, if you don't have enough personal income, we're going to be thinking about who can you bring into this loan to help you that capacity. It could be a spouse, mother, father, brother, sister, or someone that loves you very much to put their signature on that loan. In terms of collateral, if we talk about SBA lenders, they might be looking at putting a lien on your property, right? If you're asking for $500,000, $250,000, they might be looking at doing that. So to pretty much provide strength to the deal, that's what collateral does. It's a risk mitigating factor. It's like a guarantee, right? So it's important to know where it is located. It is important to know what is it worth in terms of a property. You know, what is your equity in the property? For lenders like us, CDFIs, we don't require collateral. However, if you have a car that is paid off and that will provide strength to the deal because the deal is risky, we will invite you to pledge that vehicle, and it must be paid off. It doesn't have to have the value of the loan amount. It could be 20%, whatever. The thing is that you're putting skin in the game, and that is, you don't want to lose that vehicle, so technically you will pay your loan, right? The other C will be capital, is how much money do you have available for this venture? Or how much money did you inject in your business when you started? Or how much money you have saved? How much money you have in the bank? How much money you have in your brokerage account? How much money you have in your 401k? How much equity you have in your house? So all these things make the lenders more comfortable. If you don't have money anywhere, you don't have any cushion, that becomes a riskier deal. So it's very important that you disclose what you have, because lenders like to lend to people that have money. When you don't have money, it's very, very hard to get money when you don't have money. So remember that. Condition is the purpose of the loan. So there's certain purposes that do not qualify for funding. And so it's important that you have a clear purpose of you want to do with the funding. Your business have to make sense and within the economic conditions that we're living at the moment of your application. So basically, if you, for example, are going to start manufacturing masks, right? During the pandemic, that was a great business. Everybody was getting into that space and manufacturing masks, and they sold a lot. I had a client that sold about $4 million in masks, right? But nowadays, if you come to us with the idea of starting that business, we're gonna say, it's over, the pandemic is over. There's plenty of masks in the market right now. So that doesn't make any sense. So those are the things that you need to keep in mind. Now,
and Rosalinda, I want to pause and see if there's any questions on anything that you've talked about so far, any clarifications from folks, because I do want to make this a bit interactive if we can. So anything that Rosalinda's talked about so far that you want clarification on, please come off mute and ask your questions. Going once, going twice. Okay, sounds good. And again, continue to use the chat, introduce yourself. We had a few folks hop on late, so feel free to introduce yourself in the chat and use the chat for questions too. Okay, back to you, Rosalinda. Just wanted to do a pulse check on everybody.
No problem. So in terms of credit, well, you know, we all have a good, the majority of us would try to monitor our credit very well, but there are certain things that you, as a business owner, you need to keep in mind. So when we are small business owners, the lenders are going, you're going to have to sign a personal guarantee, and they're going to look at your personal credit. Okay, especially responsible lenders. So it's important that you keep an eye on your credit card utilization, and don't use your credit card to finance your business, because if your utilization goes over 30%, your credit score goes down, and your capacity to show repayment is going to be reduced. So be careful with that. It's better to ask for funding before you need it, and don't use your credit card. Now, do not close long-standing accounts, long-established accounts. You can cut your card and don't use them anymore. Let the bank close them, because if you close them, that affects your credit. And also try not to have more than 3 inquiries in 130 days. And be aware also of the scoring models that the banks are using, because if you get your credit score from Credit Karma, for example, it might say that you have a 750, but when the banker pulls the credit, it shows that you have a 700 or a 680, and you wonder what the difference is. There's going to be a difference because of the scoring model that particular lender is using. So, okay. So here is what I call the formula for success. This is the formula that the majority of the lenders will use to find out if you have the capacity to pay. And it's simple. In the case of a responsible lender or community development financial institution, we're going to use global cash flow. What global means is that we're going to use all sources of income, not only your business income. So a traditional bank, if they're going to lend you business, lend you on your business, they're going to use your business. But we have more flexibility at CDFI. We can include other sources of income. So we're going to use, if you have any income from anywhere else, we're going to count it for this analysis. So we're going to take all sources of income minus all of your expenses, including business and personal income and business and personal expenses. We're going to come to a number called the discretionary income. That income has to be enough to make the payment of the loan. So, for example, if your discretionary income is $2,000, so we cannot give you a $100,000 loan because your monthly payment will be more than $2,000, right? So that's something we're going to consider. So if we use the debt service coverage ratio, is going to see if we're going to use the, we're going to see your business revenue minus your divided by your business expenses. When it's global, we take your global income divided by your global expenses, and we're going to come to the ratios that you have down there. So we want to make sure, a lot of banks might say our ratio needs to be over 1.25, over by 1.3. For CDF5 more flexible lenders, we might be able to go down to 1.0. So it all depends on the overall strength of the deal. But this is a good formula to know when you're looking for funding. What documents the lenders are going to require?
Rosalinda, let me just peel off one quick question that came in the chat based on the last slide. Lori asked, child support, spousal support, does that count as income in your world? Okay, perfect.
Any consistent income will count as income. And if you have, for example, unemployment is difficult because it's going to end, right? It's going to end. So when you're looking for to start a business, don't quit your job. That's advice number one. Don't quit your job, because then where you're going to show that capacity, unless you have a spouse that have an excellent job and is able and willing to support the business and the family while the business takes off. Now, in terms of documentation, of course, we need the application. We need your copy of your ID. Any owners that own 20% or more need to be on the loan. So that thing that, okay, but I don't want my spouse on the loan, even though he's my partner, I don't want him on the loan. That cannot happen unless the equity is less than 20%. Now we're going to make sure you have a business. So the business has to be registered. Make sure you can show proof of income. We're going to look for 3 months of bank statement of all of your accounts, because we're going to find the money. Where is the money? We're going to look at financials for your business, balance sheet and P&L. We're going to look at the debt schedule. What is the list of your debt? We don't actually ask for that because we can see it on your credit report, but a lot of lenders do. We're going to look at 2 years of taxes. If it's a larger amount for loans under 25, we're not going to look at that. If you're starting a business, we're going to look at a business plan and projections. The breakdown of the usage fund is very important because shows preparation. So if you say, well, I'm starting a business and I need 50,000 for working capital, that's not going to cut it. You need to have a specific use of funds. So I want 10,000 for rent reserve. I want 15,000 for the tenant improvements, or I want 10,000 for inventory. I want 10,000 for marketing. Whatever is it that you're going to do with the money, you need to state that. Now, if you're pledging a collateral, we're going to get that title at closing, because there's going to be a lien put on that title. And if you are moving into a location, we're going to need to see the lease agreement. So anything that can support that loan. If you're going to buy a big piece of equipment, we're going to want an estimate, a quote, or an invoice for that equipment, for example.
That's great. And we've got another question, and if you're going to get to this later, then we can pause on it, Rosalinda. But Chris asks, are there programs for delayed start? She said, for example, build out, including the business, because there's going to be negative cash flow. So you're starting a restaurant, let's say, and you've got to build out the kitchen, having to start paying that money back right away. Are there programs like that?
That's where the other source of income is going to come in. It's going to be
okay. So you're like, so the answer is no, basically.
Because every case is different. So we need to really talk about each case separately. But on the general sense I will say that's where the other source of income is going to come. Because I have seen people that, I had a client that started a bakery. She was going to start a bakery. She got a startup loan. She had a ton of money in the bank. She had inherited maybe over $250,000. Okay. And she couldn't get it open because the first contractor that came stole her money and ran.
Yeah.
And then she had all the equipment to buy. A year went by, she couldn't open. She had to file bankruptcy.
Oh my gosh.
She couldn't open. And then she had to sell all the equipment she had bought to be able to pay the loan. So it was a very difficult situation. So it's important that you are very prepared and that you learn and you look for advice in negotiating that contract. That is very important, to negotiate your contract with the landlord, because you want to make sure you can open that business and it doesn't get delayed, especially if you're going to have permits and all that. So when people start in restaurants, I tell them, look for a place that have been a restaurant before, because starting a restaurant is super, super expensive. So those are the things that your advisors, and we're going to talk a little bit about that, your advisors are going to tell you when you come and talk to them. Now, in terms of going back to the presentation, when you're approaching lenders, there are lenders that lend for something and they don't lend for other things. So if you go to a bank, the question you want to ask them is do you lend to startups? Do you lend to businesses that have 100,000 in revenue? Or how much revenue do you need to be able to borrow money from the bank? So the bank is going to tell you, yes, you can, and we can't. So you're going to go to all sorts of lenders. If you're going to go to 5 banks, all the banks are going to give you the same answer because they are all banks. Now, you might get a different answer from a community bank versus a well-established bank, or you can, or a nonprofit lender like us, or a factoring company, which is an asset-based lender, or a revenue-based lender, or an alternative lender that are usually the high-interest lenders that they will give you the money tomorrow, but it's hard money, and hard money is fast money, but it's very hard to pay back. So keep that in mind as well. And let me tell you, women is prey number 1 for predatory lenders. And I'm seeing that with women that have called us because they have fallen into the trap of predatory lenders. So be careful. Any loans that which APR is over 30% we consider it a predatory loan. We personally consider. We have refinanced loans that are 100%, 200%, 80%. And those loans, basically, you're working to pay the lender, not to grow your business. So keep those in mind. Now, when it comes to, so we are willing to take more risks. For example, a traditional bank might not lend to start a restaurant, because food, that is a very risky business, but we do that. Retail is another risky industry. We do that. Okay, so we are here to serve those industries that the bank is not able to provide funding for. Okay, trucking and logistics is another one that we can lend to. So asset-based lenders are, for example, more for government contractors. They say, I got a big contract and I need to hire 50 people for that. So factoring becomes a better option than a lender like a community lender, right? So you also need to identify who is the best lender for the needs that you have as your business. So revenue-based lenders are more, for example, you're planning a big concert. It's probably going to be one concert this year, but you are going to sell a lot of tickets and it's going to be a huge concert, but it's not something that is ongoing. You might be able to get funding based on a percentage of the sale. And this is more for this type of industries. So it's important that you identify, that you let the lender know what is it that you're trying to do, so we can guide you to the best possible lender. Now, there are 2 platforms that you can find a responsible lender. One is Connect to Capital. That platform was created during the pandemic. You answer like 15 questions and they will match you with a responsible lender. Venturize.org is another platform. It's more difficult to find a lender there because they also have all other resources for small businesses. It's very helpful, but it is the website of the Small Business Majority, which is a nonprofit organization that provides assistance to small businesses as well. Things to avoid while applying for the loan. You want to make sure you have all the documents, because you don't want to waste anybody's time. You don't want to waste your time or waste the lender's time, and you take the risk of having your application be withdrawn because you're taking too long. So make sure you are promptly in all of your documents. You want to don't borrow before you talk to the expert. Get all the advice you can. Don't spend the money before you get the final approval. I have been on my way to the client to give them the check, gotten a call, we're denying the deal because they find out that you got into more debt. They did a soft pull of your credit. They found more debt, or they refresh your bank statements. They found more debt, so be careful with that. You don't want to do any other transaction when you are applying for a loan. Don't refinance your home, because then you might lose in both ways, right? Because you're doing we're trying to do two things at the same time. Don't apply for new credit. That also will drop your credit score. Don't quit your job or change jobs. That will affect the underwriting as well. Make sure you don't mix personal and business. Have everything separate, because if the lender wants to know if your business is really generating revenue and it's really profitable, you don't want your business expenses in there. Your personal expenses in there. You want everything separate. Don't sign any leases until you have your loan approved. I had a lady, one that she signed because you're going to have to file bankruptcy pretty much to get rid of that lease. Because once you sign the lease, you are on the hook for that lease unless you have the money. This lady wanted to start a tea shop. She rented a place in La Jolla, and she was not eligible for funding. I don't know what happened to her, but she was on the hook for that. She was on the hook for that lease for who knows how many years. Now, make sure you deposit everything that comes to the business. Make sure you deposit it, because if it's not in the bank, we cannot count it. And if you are going to make large purchases, be careful, because they can deplete your funds and your money in your bank account. So wait for those purchases. You also want to be transparent with your lender. If they ask you a question and you answer in a certain way, and then the loan processor put notes of the answer that you gave her, and they are different to the underwriter answers, that's going to ruin your credibility. You don't want to lose your credibility. Be transparent on your loan. And of course, you don't want to run out of money. So don't wait until you run out of money in order to get more funding. So in terms of our program, I can tell you that the Accessity, the maximum we lend is 100,000, and maximum interest rate right now is 14.99. And the interest rates are keep going up. We are not driven by the market, but I think eventually something is going to happen. So keep that in mind. There is no application fee. We base our decision on those overall 5 C's that I explained to you. We have no prepayment penalties, because our main idea is that once we lend money to you and your business start flourishing, you might be able in 2 years to go to your bank and say, hey, can you refinance the loan from Accessity? Or can you give me more funding? And we will definitely, we want you to be able to refinance that loan for more money from the bank, because then you will be graduating from our program. And that's, we have gone full circle, making you bankable, which is one of our ultimate goal when we create businesses and jobs for people, right? This interest is simple and fixed, is fully amortized, and is personally guaranteed by the owners of the business, and is approved in about 3 weeks. The maximum term is about 6 years, and there are closing costs, but I'm happy to announce that this year we're starting rolling those costs into the loan. Due to the new legislation that we have to disclose the APR, all lenders have to disclose the APR, so you receive an offer from us with the actual APR that will include all the closing costs, and you actually know what is your interest rate, your real annual percentage interest rate. Now, in terms of, we have a product that we introduced late last year. It's a $25,000 low documentation loan. This is super easy because you don't need to have your 2022 taxes filed. You don't need to have financial statement. You just need to provide bank statements, not even a business plan. If you only want 25,000, you can come to us with your bank statement, your 1 year of tax return, probably 2021, and your credit report, and of course your application, and we'll be able to make a decision based on that. And the maximum term on this loan is 36 months. Okay, when I spoke about experts, here are experts that are pretty much going to provide you a lot of assistance. We have wonderful organizations in San Diego, including the Small Business Development Center with business advisors with all sorts of expertise. Use those advisors, attend their classes, attend their events. The Women Business Centers, another great resource. They're very good in marketing, in all sorts of needs. SCORE, another nonprofit organization. These are organizations that have been created by the SBA. Veterans Business Resource Center is another one, a VBOC. So, and these are free and created by our tax dollars. Now, you can also go to your private experts, your CPA, your bankers, your attorney, even a real estate broker. If you're looking for a location, someone that is able to help you negotiate that lease, because this is not something that you do every day. Look for advice before you jump into business ownership. This is our website. Feel free. There's a lot of resources there. We also have a client marketplace where we promote all of our clients. This is our team. Joyce and Juliet Service San Diego County, Melba Service North County San Diego, and of course the other ones service other areas of Southern California as well. So feel free to reach out to them. You're gonna probably have a copy of this presentation, and I can send a PDF to you, and you can contact this business development officer. Now I'm going to open it up for questions.
Awesome. Thank you, Rosalinda. And we'll make this recording available on the NAWBO YouTube channel as well, so folks can go back and watch, and we can share if they missed it. I love it. Okay, so Lori Itkin, I swing over to you. You want to ask your question live?
Yeah, Rosalinda, I was glad to see that you lend to people that don't have a social security number, but they have the ITIN. And I'm just curious, do banks routinely turn down folks with ITINs?
For loans, yes. You can they can open a bank account, but for loans, typically, yes. Yeah, so we are able to lend to ITIN holders, people with visas that might be here on an investor's visa, people, DACA entrepreneurs. I don't know if you're familiar with DACA. These are children what were brought from their countries by their parents, and they got a special status, right? But then they went to college, they graduated from college, and they might not be able to find a job because they do not have a permit to work, right? Yet, so they decide to start businesses. We can help those as well.
Right.
So thank you for noticing that, Lori.
I love it. Questions, come on, let's, we've got the lone ninja here, so let's ask her all the questions. Is anybody looking to actively secure financing right now? Let's talk through your situation.
I actually have a question.
Yeah.
I have a client. He is actually in a lot of debt, credit card debt. He didn't really start off his business really properly. He just used a bunch of credit cards. So now he's paying a lot of interest, and we're trying to get approved for a loan to consolidate. But I just don't know, like, is it good to apply? What are the chances to get approved for consolidating credit card debts? And what do we need to do?
Well, are these credit card personal or business?
Personal. It's really messy.
Yeah. So personal credit cards, you need to find someone that specializes in credit card consolidation. Yeah.
Okay.
So we cannot touch your personal credit cards. Okay. So because we're a business lender, so the money is supposed to be used for the business. So it cannot be a business loan. So it is a very difficult situation, but there is solution because we have had clients that have done it. I have seen it. So I think there's yeah. So you need to find a resource for him for personal debt consolidation. I can offer you a resource, but they don't do consolidation. They just give advice. It's a nonprofit called Trust Plus.
Trust Plus, okay.
Trust Plus. You can also contact credit.org. They might be able to have resources that they can provide for you, and they will give that to you over the phone.
Is it true that when you consolidate credits, it's going to like affect personal credit score like drastically, or no? Is it a myth?
Well, I don't think it's a myth. I think everything affects your credit, and lenders are going to see that because lenders are going to see that you have a consolidation. Okay, and that will affect them in a short term, right? Because if they do a consolidation in April and they come to us in October to ask for more funding, we're going to say, but you just got a debt consolidation. You know, because you were in trouble. Now you're going to get into more trouble. You know, so that's what the lender is going to be thinking. Okay, so it's important, you know, with Trust Plus, we can get them to learn budget management, you know, control, because the only way you can improve is you have to either improve your revenue, increase your revenue, or reduce your expenses. So if you cannot improve your revenue or increase your revenue, you need to start controlling your expenses and say, well, I'm not going to do this anymore. Well, I'm just going to cut this out, or, you know, subscription, all this type of thing. You need to analyze your expenses. Okay, so that's the only way if you don't have access to capital.
I see. So if it's credit card debts, it's only consolidation. You can't really get a loan to like pay back your credit cards and use that loan to pay things back.
No, because in debt consolidation, what they do, they group everything. They negotiate with the credit card companies. They negotiate and they give you one payment, right?
Okay.
It all depends who you work with, but I will say contact credit.org for names of reputable companies that can do that for your client, right? And have those in your toolbox.
Thank you.
Good advice, because if you just Google that, I'm sure you're going to get a bunch of predatory kind of companies that come up. So
yeah, especially when it comes to consolidation, it's scary if you don't use the right provider.
Yes, absolutely.
Lori?
Thank you.
You mentioned, I was a little surprised that the upper interest rate was 15% and the closing cost is 6%. Can you maybe describe the process you use to educate borrowers that, you know, how much extra return you have to make on your business to actually pay off the debt service? I mean, what kind, because people who have no experience, they don't understand this. How do you help them understand what kind of profit they're going to have to make just to pay off the debt service?
Well, that's a very, very good question. You know, first of all, for us to be able to approve a loan, we need to make sure the client understands what they're getting into. Okay, because a loan is a loan. A loan is not a gift, it's not a grant. So, and it might solve your problem now, but it might create a bigger problem in the future, right? So the only thing that a loan is going to do for business owners is help them get there faster. right? Because you can grow your business organically, right, with your own funds, but you might miss an opportunity, right? Or you want to get there fast. I want to get this year to $100,000. I want to get to 150. I want to get to, and that the loan is to grow the business. If the loan is going to hurt the borrower, we are not going to approve that loan. And you know, I had a situation recently of a lady in LA. She had this home-based business, right? In her home-based business, she was making $4,000 a month. So she wanted to open a space. I said, okay, so have you found a space? Yes, I found this place. And how much is the rent? And she said, $4,000. And I said, and she couldn't understand it. And I said, but let me ask you something. So I said, but why won't you give me a loan? But why am I not eligible for a loan? And I said, okay, if you're going to pay your landlord $4,000 and you make $4,000, how are you going to buy inventory? I had to tell him tell her a few times, and she went like, oh, nobody ever said that to me. Nobody ever explained that to me. You're right. I shouldn't do that. You see, but they are thinking in a different way, because if you have to, that will increase your expenses $4,000 a month, and you will be in the negative right away, right? Yeah. So,
and that's actually, Samara, do you want to hop off mute and ask your question, because it's such a good question.
Hi, everyone. First of all, thank you so much, Rosalinda, for all of this information. And I'm so glad this is being recorded for our members. My question was, does Accessity provide trainings on mindset around money for those people who are seeking your services? There's so much around that.
Well, we have 2 trainings that we provide every year. It's called the Accessity Academy. It's a 10-week program where we basically train people to start a business or grow their business if they just started. You know, it's very but we go over everything. We even in the first class we have them track their personal expenses. We don't tell them why. We say you need to track everything you spend, everything you spend. They have deliverables at the end of 10 weeks. The program is free, basically free. And after 10 weeks, when they graduate, they can access $5,000 to start their business. Some people, they realize that they are not going to start the business when they take the course. Some people, you know, start the business, but they have a much better understanding of the things they didn't know. And we go over everything. We go about personal finances. We go over, you know, business finances, because if you have a good control over your personal spending, you're going to be able to manage a business better. So we provide those 2 trainings a year. As business development officers, we provide technical assistance. So in this particular example that I explained to you, I was with that lady probably 35 minutes explaining to her why she was not eligible for a program. So this is a type of communication that we have with people, because they need to understand what they're getting into if they get approved, right? So definitely it's a conversation that we're going to have. Everything else, we're going to definitely, if we feel that the person is not prepared with their credit, we're going to send them, or if they have, like the lady explained, Alan explained about debt consolidation, we will refer them to Trust Plus, because it's actually one of our partners. We actually pay them for them to help our clients get back on track or get prepared for lending. Okay, so that is a resource that is free to our clients. And when it comes to resources related to business decisions, we're definitely going to send them to the Small Business Development Center, or we have an in-house SCORE mentor that works with all of our students as well, that you know, that they can pretty much bounce ideas and learn from them as well. There is a wealth of knowledge in San Diego. If you really want to know, the resources are here, because we are the creep of entrepreneurship. So is accessing those resources that are here for business owners.
Rosalinda, what's the best email address or, directly for somebody who's interested in that course, something we can put in chat for people?
Okay, well, let me tell you. In the fall, we have a Spanish speaking course. In the spring is the English speaking course. Go to accessityacademy.org and you can apply, or whoever your clients can apply. The deadline for application is February 12th, so it's approaching.
Yeah.
Because the spring academy is going to start pretty soon. And it's by application only, and we accept about 35 students in the class.
Putting in the chat right now.
Accessityacademy.org. Everything is there.
Got it. Awesome. That's super helpful. And thank you so much. Thank you, Deanna, for you beat me to it. I love it. And then mytrustplus.org is the other site that was mentioned, and I put that in the chat. That's super, super helpful. Yes, my mindset stuff, come on over to Deanna Nunez, and she'll help you with the money mindset. Awesome.
Yeah, sometimes people get so they focus on their idea, the idea for the business, the idea of the business, but they are nowhere ready for it. And that mindset is super important, because once they realize, wait a minute, I'm not ready for this, and we have had people in the academy that say, wait a minute, I'm not ready for this. This is a lot of responsibility, but you need to know. You need to know a business is a business. And also people, I don't have a business plan, projections. The projections are going to are going to give you answers. Okay, so what is the most you can get? What is the most you can sell? What is your revenue in month 1, in month 2, in month 3? What do you think what are you going to do to generate that revenue in those months? It's not about getting a space and opening your doors. There is a lot more to it. And that's why education becomes key for that success.
Love it. Eric, you were on early. Do you have any questions for Rosalinda? I see you help people get into home ownership.
Yeah, it's a little bit different though. We're a nonprofit organization. So yeah, so we don't necessarily have revenue. We are a new nonprofit. We're just starting up and looking to connect with other organizations and talk strategy and fundraising and things of that nature. But just kind of wanted to get this information because we do work with a lot of individuals who have businesses. And so they'll ask questions about, just business loans and those types of things. So gaining this insight more or less for clients.
What is the name of your nonprofit, Eric?
Homeowner Prep.
Can you put on
help.
that, please?
Yeah, absolutely. So we help renters become homeowners, and we focus on minority communities. But we are a new nonprofit. We've been operating for about 5 years as a internal program to my real estate brokerage, but we just got our 501c3 approval.
Congrats.
Okay, well,
that's exciting.
In San Diego, there is a lender. In San Diego, we have a lender that lends to nonprofit. They're called Mission-Driven Finance. If you have a nonprofit that really has an impact in the community, you might be able to get funding through them.
Oh, awesome.
It's called Mission-Driven Finance.
Mission-Driven Finance. Perfect. Thank you
we
so
don't
much.
lend to nonprofits, but they definitely do. And if based on the resources that you need, if it's something that you're looking for, reach out to them.
Will do. Thank you.
Yeah, just put that in the chat. Do you have a website yet, Eric?
Yeah, we're at homeownerprep.com. I dropped it in the chat as well.
Oh, perfect. Thank you. I see it now.
We also have a Homeowner Prep podcast, which we release every week.
Cool. Awesome. Thanks for joining us.
Thank you.
Awesome. Other questions? Kristen, Chris?
And we lend to all sorts of businesses. Let me see. Food businesses, retail, e-commerce, home-based, childcare, elderly care, hair salons, barbershop, schools, all all sorts of food trucks, you know, logistics, transportation, manufacturing. We learn to all sorts of businesses.
I had put a question in chat there earlier, Rosalinda, but you know, we really appreciate your efforts for this equitable lending. And I just wanted to ask you, since you've got a platform here with a bunch of people, are there any good strategic partners that you can think of so we can support your efforts? Maybe we can facilitate some connections for you within our networks. Yeah, how can we support you as well to continue?
Very good. Thank you for your offer. You know, I will say the majority of our referrals come from banks, because as a community development financial institution, we get funding from banks. We get funding from Bank of America, from Wells Fargo, from US Bank, from all the banks. Have to comply with the Community Reinvestment Act, which is a legislation that pretty much forces the banks to invest in the community, right? And one way they invest in our community is to give us funding so we can lend. But a second way that they get credit, CRA credit, they call it, is by giving us referrals. Okay, so those referrals, basically, if we are able to help them, the idea is they continue to be a client of the bank, because the bank is going to do all their, you know, accounts, their merchant services, you know, all the other services of the bank. And in addition, they got a loan from Accessity, right? So we are here we receive a lot of referrals from banks. Other referral sources are SBDC. That's probably our second referral source another referral source for us. Now, another good referral source will be CPAs, tax preparers, bookkeepers. So, I mean, you see this a lot, that they don't know that we are here because we don't advertise, right? We don't have big billboards, and they don't know that CDFIs are here. So it's not only for Accessity, but there are over 250 CDFIs only serving the state of California. We all service different areas, but we don't have advertising budget, right? So word of mouth is the best thing. So spreading the word that we are here, that we're serving the community, that we're here to help businesses grow, that they can create jobs and we can improve our lives. You know, that's what we are here for. And if we can share that information, great. And if you have other people in this position, that you are financial advisors, CPAs, business counselor, you know about these resources, because they're going to empower business owners. They're going to help them get where they need to go faster and provide jobs for others. Thank you, ladies, so much for having me here today.
Yes. Ladies and gentlemen.
Huh?
Ladies and gentlemen.
Ladies and gentlemen, yeah.
Thank you.
Yeah. But it was a pleasure being here today. I wish you all the best in your business endeavors. And if there's anything I can do to help, my information is in this video. Yeah. Rosalinda Delgado, rdelgado@accessity.org, 760-298-9513. Thank you so much for having me today.
Yeah,
have a blessed day.
We appreciate you. Absolutely.
Thank you, Rosalinda.
Thank you.